studio and parks were the big blow in the quarter, and really drove the EPS beat.
And is that a sort of strong beat, that those subsectors beating versus others?
Yeah, exactly. Parks has really been one of the strong growers for the company, and then and there was a difficult comp in parks too with the Easter shift, and then the studio also a difficult comparison comping against Black Panther last quarter. So Captain Marvel really drove those results stronger, and then we look for Avengers Endgame to drive the June quarter's results.
I mean, Michael, we've been talking about how Disney successfully changed the narrative around this stock, where we used to go straight to ESPN and it was all about the cable, and now, you know, we're talking about the parks and Avengers and looking ahead to Disney Plus. How have you seen the change?
I think there are two things that came out of today's announcements and in the last day. First of all, that Bob Iger announced that Avengers Endgame will be available exclusively on Disney Plus this coming December. So it shows they're very serious about making the streaming platform work. At $6.99, it's not going to replace Netflix. It's going to be an add-on. And the second thing that they did yesterday was they released their release slate for the next 5-6 years, and so showing that all the films they're going to have come out. Very exciting in terms of what they're going to do and what's coming from their films.
James, Disney Plus clearly something that's caught a lot of people's excitement. Do you fear it can hit margins though?
Not really. I think what you're seeing in the Disney stock is that older generations making assumptions on what future generations' viewing habits will be. That's why you're seeing a 30% appreciation in the multiple to about 20 times. I think there's a lot of confusion in the market right now, but we're seeing a seismic shift in the way content is consumed, particularly by younger generations. And what Disney is experiencing right now, you're seeing in the numbers, is the bifurcation between advertising and cable subscription revenue, because you're getting more and more specialized on both those sides with content players and advertising players, platforms like Google and Facebook. So when that happens, the models, the kind of the margin models you have to look for is kind of what 35% for Disney, you know, versus like a 7% for Netflix, and with the costs that are escalating on the programming side with sports rights and everything of that nature, I just don't see how this is sustainable. They've changed the narrative on the access side, but they haven't evolved their studio model, which is still operating on legacy terms.